Stock market's up. What's the deal with that? Bank losses $35 billion. What in the hell happens to dividends? And Cochlear punished by the masked avenger, Paul Rickard. I'm Peter Switzer.
I'm Paul Rickard. And we're mad about money.
Okay, Paul, the stock market, it continues to rise, particularly in the USA, out of bear market territory. What's the deal?
Well, look, I mean, the USA, Peter, I mean, they're just confident that they're going to get back to work. Profit season's not going too badly so far. This is the biggest week in the earnings season results. And like a lot of things, markets always look for the worst. Haven't been quite as bad. Alphabet reported after the bell today, which isn't too bad.
Google.
It's Google. That's better, you know. A little more confident also, saying they're seeing some upticks in search inquiries, which suggests that
people locked at home.
People locked at home and starting to think about what they're purchasing. So look, I mean, the US, they're glass half full guys like you, Peter, I guess, and whereas in Australia, we tend to be more glass half empty.
Yeah, and we are on CNBC today portrayed as the world champs in beating the coronavirus. So look, the bottom line is this, Paul. The virus stats are heading in the right direction. Particularly here, America is actually just getting better now. End result is they believe that the closures and lockdown calculations, the hibernation effect, if you like, is going to be shorter. Therefore, the worst case scenarios are going to be less worse.
Yeah, I mean, look, I'm not sure whether getting the gold star for getting the virus down, obviously good for our health reasons, Peter.
Yeah.
Whether it's the best way to handle it for the economy, I'm not sure, because we seem to be incredibly reluctant to want to ease up. But look, let's just see how it plays out. I think a few of the state premiers, New South Wales, Victoria and Queensland, are really struggling to get a handle on what's going on out there. They need to... something needs to happen to Gladys and the Queensland and the Victoria premiers, right?
Well, the big question, Paul, you have to answer before they ring the bell on us. Who are you going to go to dinner with on Friday night?
Well, I'm not sure we can go to dinner, Peter, but you can have two people over. I guess you can have a dinner party for four, can't you? Yeah. And the kids.
Yeah, that's right. Oh, you're stuck with them.
Well, I won't be having dinner with you, I know that much, Peter.
That's right. Too far. All right, bank losses, $35 billion in the AFR today. Do you believe it, Paul?
It's a big, scary headline, isn't it? $35 billion. Look, a couple of things. This has come out of a couple of analysts looking at what Westpac and NAB have had to say, talking about not this year, over 3 years. It's all to do with forecasts about just how bad the crisis could be and how bad the recovery is. Nobody knows, Peter. Absolutely nobody knows. Right? In fact, what the banks have done, if you look at their reports fairly closely, they've put some scenarios together, done some stress testing, and come up with some numbers and taken a probability-weighted assessment between their different cases. Yep. That's how the National Australia Bank came up with its sort of $800 million. Westpac came up with a little bit more yesterday. And that's what they're going to continue to do, but they're just forecasts, right?
Right.
They're like the forecast that said hundreds of thousands of people in Australia were going to die, right? That was the worst case forecast.
150 million worldwide, I think it was at one point.
So nobody knows, Peter.
But also, can we also put a bit of the mentality? How many big banks have new CEOs? 3 out of the 4, right?
Yeah.
Now, if you're a CEO, wouldn't you always go for the worst case scenario when making your predictions? If the worst case scenario doesn't turn out and your bottom line looks better and you raise the dividend, say in a year and a half's time or whatever, you're going to look like a really good CEO, aren't you?
I think there's a bit of that in it, Peter, as well. So, look, let's not get too worried about the headline. I mean, I thought it was a positive that NAB paid a dividend. I thought that all goes well tomorrow for ANZ. I think we'll get 40 to 45 cents from the ANZ and something from Westpac next week. So I think the good news that's come out of this, if you look at the last week, is the banks are listening to their shareholders and are recognising, okay, capital's got to be strong. But, you know, despite what Sean and others in the AFR say, a lot of people, a lot of self-funded retirees rely upon their bank dividends. Yep. And a 40 or 50% cut is a big cut. Yep,
that's why we created the Switzer Dividend Growth Fund, Paul, to get a whole lot of dividend stocks all in one area. Now, Paul, you punished Cochlear for their capital raising, which was really unfair on retail shareholders. And like a good hearing company, they listened to you.
They did listen. I wasn't the only one, but maybe one of the first. I did write last Thursday, before the close of the Cochlear share purchase plan, that $50 million was way inadequate and their directors needed to stop having a tin ear
Yeah.
and start listening to their
yes.
shareholders. Yesterday they announced
Whacking
that they'd
a Cochlear
increased the share
device.
purchase plan by a massive $170 million. So it's from 50, as they originally set out, to 220.
So basically, they gave too much money to the big funds and not enough to retail shareholders. That's what you were whinging about. You hold Cochlear
Well, I'm also
shares, don't you?
whinging. Cochlear is actually chaired by the chairman of the ASX. Now, there is a problem here, right? There is a problem here with companies and their capital raisings. Too many are opting for the easy way out, which is the institutional placement.
Big companies.
Yep, followed by the quick share purchase plan. That's what National Australia Bank is doing. That is diluting retail shareholders. It's not the fairest way to do a capital raising. A fair way to do a capital raising is to do an entitlement offer, and some companies have done that. Now, regrettably, National Australia Bank has gone down exactly the same path with its share purchase plan. It will need to be increased, right? I think it'll be a bit of a no-brainer to participate, by the way, Peter. But retail shareholders need to start berating their directors, getting angry with their companies and saying, we are just as entitled as the institutions to take part in.
Yes.
These are gifts, right?
Yeah.
We've seen this before on the GFC. Yeah. The best time was to invest.
A share at a lower price, you hang on to it, and they come good.
Yeah, and that's why one of the reasons I haven't been putting money in the market, because I've said the equity floodgates are open. There's going to be a lot of them. More announced this morning. They're going to keep coming. This is how you get money back into the stock market. But it needs to be fair, and I think boards need to be held to account on this, and shareholders need to start getting angry. Yes. Use the phone, get mad with them. Whatever the phrase is, I can't think of it, Peter.
Getting excited.
I was getting excited.
The Mask Avenger, Paul Rickard. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money. Shh.